Hi, my name is Tim. I am the Director and Owner of Platinum Accounting Services and a member of the ACCA. One of the things that a lot of people don't understand is personal tax years. What is it? How does it work? Why is it relevant to me? Well, there's always tax years in each country that you're in, and it's the way of the government knowing what income that you have in that year needs to be taxed at that point in time. Because without a cut-off date, how are they going to know how to tax you? So the way they do this is they have the tax year which starts on the 6th of April, which is ironically my birthday because I'm born to be an accountant, of course. And it runs all the way to the 5th of April the following year. So giving you an example, the tax year 24-25 is from the 6th of April 2024 to the 5th of April 2025. Any income that you have within that period of time will be taxed within that period. And then you have all the way till the following January currently to pay your taxes. Also can have interim payments called payments on account, but I won't go into that. But broadly speaking, that's the way it works. Going forward into next tax year, there is something called NTD-ITSA. I have another video on this. I won't explain that now. So please go to the YouTube, have a look at that one if you have sole trade or rental income. So it will affect you. So giving an example of why this is relevant is that, let's say you're the simplest person in this example, you have a salary and you have gone from job to job. What tends to happen, or you have variable income, your tax codes will get played with. And then what will happen is that when you start the new tax year, new tax code, you start off afresh and then you go ahead. Otherwise, it just gets painful very quickly. So these things kind of reset each year. And it's important because timing of your income for capital gains tax purposes or even income purposes can be very relevant. So give an example. Let's say you are a sole trader and you have income of say £50,000 and you are now in March and you have another invoice for £10,000 that you're thinking to do the work for. You haven't invoiced the client, you haven't started the work, but you're thinking, hey, it's the 31st of March. Do I want to do that today, or, should I go on holiday first? Because you've got some time with family. So if you then decided to actually go away with your family, in an example, and then come back on the 7th of April, which is obviously in the new tax year, then simply that invoice would be in the next tax year, which means you deferred the tax on that income for a whole year in this example, which is a long time. Obviously, if you need that income in your self-assessment, say you're looking for a mortgage or you're looking for loans, then you may look to make that invoice earlier, in the earlier tax year, because if you haven't got income, you're not going to get a loan. And that's as simple as it works, because the way loans work is that the more you can show you don't need money, the more money they will lend you, because the surer bet you are to pay. So these are just two very simple examples of how the personal tax year will affect you and how that works. My name is Tim. I am from Platinum Accounting Services, and I've got a passion for helping you understand your taxes and finances. If you want some more advice and tips, please do look at my YouTube, and don't forget to subscribe for any new content that comes out from that side of things, and press like and subscribe. Nice to speak to you. Thanks.